Hello, everyone. So if you can just confirm me in the chat that both the video and the sound are okay. Okay, super. So then let's start. So the point of the video today is to introduce you the subtleties of our farming program. We're gonna give you a tutorial that you will be able to follow step by step for the one for whom it's the first time that you will participate to such a program. And firstly, in the first part, I will explain you what is farming, explain you what is liquidity provision and what it is to be a liquidity providers, what are the risks and so on. So of course, if you know already this, just bear with me until the end of the live where I will explain you how does our farming program work. And for the other one, I will not get into technical details. So I will do a lot of shortcuts. But if you really want to know way more about liquidity pools and farming and so on, you can, of course, do your own research and dig about this topic. So let me share my screen. And let's start. So welcome in this live where I will explain you how can you farm the token Aureus. This is how we're going to pronounce it. So first, let me just explain you quickly what is farming for the one who doesn't know what it is. So basically, it's just a strategy to attract users and liquidity. For if you know Revolut, the bank, who became a bank lately, how did they attract users? They just gave away for free bank card. It was maybe one of the first time that a bank was okay with me, everything is free, transfer are free, my card is free and so on. So of course, it was not free, it cost them money. But Revolut, they used the money of their investments, their investors, in order to basically pay instead of their user. And by doing that, they have attracted users. So they have lost money at the beginning, but the idea was if we attract enough users, at some point, we will be able to monetize them and finally make money. It is also what have done Amazon, for example. I think everybody knows that for years, Amazon was not making any profit because they were just trying to create a big user base, client base, and network effect, which allow them now to be the leader of their market and to generate huge amount of cash. So let's take the example of a bank. So to stay absolutely not technical. So imagine that there is a new bank which is being launched, and like all the other banks, this bank proposes 0.5% of interest yearly on your deposits. So for now, you have zero reason to leave your actual bank. It's a lot of paperwork for what? Earning exactly the same amount of money. But what if this bank, in addition to those 0.5%, were to give you their own stocks, their shares? And what if the price of this stock makes it that your yield goes from 0.5% to, for example, 20% per year? So maybe you will consider to move to this new bank. So basically, this is what farming is. You give to your user or your investor a yield, which is what we can call a native or natural yield. But to attract them and to attract more and more people, also you give away some of your tokens. And because your token has a price and a value, then it creates additional yield. But it's not sufficient, because even if you give a token to someone, maybe this person won't be able to sell this token. So you also need to have a liquidity provider who will provide liquidity for this token, so you can easily sell or even buy more token if you want. But again, you need to pay those liquidity providers. So what you will do some kind of loop where you will give more token to liquidity providers of your token. So in the example of the bank will give to liquidity provider for their own stocks more of their stocks. And it's basically a virtuous circle, because if everything goes good, the bank will attract more users and more liquidity. And if it attracts more users, at some point, it will generate revenue. Those revenue will make those liquidity providers stay, because they will earn money. And those users will be happy, and finally they will stay in the bank. Finally, the bank will make money, so the stock price of this bank will go up, and then the user will be happy because you have received stock. So basically, this is what farming is about. It's how you can incentivize users and liquidity providers to come in your application protocol, you name it. So, okay, but what is it? What is liquidity providers? So this is Binance order book. So I hope that you know how the price works. But for example, here, you can see on the top, just activate my pen. You can see here on the top, the selling order. So here are people who are holding Bitcoin and they want to sell them at those different prices. If you, as the trader, you want to buy Bitcoin right now, and for example, you would like to buy $42,000 of Bitcoin, you will need to buy first $134 to this one, $4,500 to this one, and so on, until this one. And you would have bought the Bitcoin of those different investors. Those are liquidity providers, market makers. And what will be the new price of Bitcoin? Well, it will be $45,000. So if right now you buy on Binance, sorry, not right now, but at the time I've made this PowerPoint, if you buy for $42,000 of Bitcoin, you will push the price up from $45,000 to $45,027. This is how the price is created in an order book exchange. In DeFi, we don't have order books. And the reason is because, at least on Ethereum, to maintain an order book is not scalable. It will cost too much gas, and it will be very slow. So what we mainly use in DeFi is called liquidity pool. So the question is, how does a liquidity pool work? Let's take an example of a Bitcoin USD liquidity pool. So liquidity pool basically holds two tokens. I mean, there are liquidity pools with many more tokens, but for the sake of example, we will just explain those liquidity pools. Let's say that in this pool, you have 2 Bitcoin and $100,000. So if I want to buy Bitcoin, it's quite easy. I like the allegory of a vending machine. So what you do, you just put your 10,000 USD, if you want to buy $10,000, into the liquidity pool, so like a vending machine, and in exchange, the liquidity pool automatically gives you Bitcoin. Nothing else to do. And if you want to sell, you just put your Bitcoin in the machine and you receive back USD. The question is, at which prices those trades are happening, and how many Bitcoin will I receive if I buy for $10,000? So it may sound a bit complicated here, but bear with me, it's absolutely not. We just use two very simple functions. The first one, it's called K equal X multiplied by Y. So it's easy. X is just the number of Bitcoin. There are 2 Bitcoins. Y is the number of USD. There are 100,000 USD. So 2 multiplied by 100,000, you got 200,000. This is a constant. It means that what we have to do is to calculate how much Bitcoin will I receive if I send $10,000 to the pool, in order that this equality, so the number of Bitcoin multiplied by the number of USD, remains equal at 200,000. And then how do we calculate the price? It's easy. We just divide Y, so the number of USD, by the number of Bitcoin. So here for now, we have initially a price of $50,000 per Bitcoin. So now, as I said, a bit of mathematics. If I send $10,000 to the pool, what will happen? We will go from $100,000 to $110,000. And now the question is, how much Bitcoin will I receive and at which price? So it's easy. As I said, we have to, K has to be always equal to 200,000. So we just have a mathematical problem to solve. We have X, the number of Bitcoin that we don't know how much Bitcoin we need for this equality to remain equal, multiply by 110,000 equal 200,000. So we just divide 200,000 by 110,000 and we got 1.82. So it means that for this equality to remain true, we need 1.82 Bitcoin and $110,000. So if I send $10,000 to the pool, in exchange, I will receive 0.18 Bitcoin. It's not very important if you don't really understand the math behind. It was just for the sake of example, so you can see that there is not someone who says, hey, I want to sell Bitcoin at 42 something. No, here there is no one who can tell you, I want to buy or I want to sell at this price. You always buy at the market price, and the market price is calculated with the formula that I just gave you. And so what will be the new price of Bitcoin? It will be 110 divided by 182 equal $60,000. So you have bought your 0.18 Bitcoin at this price, at $60,000, and you have created a slippage because before the price was 50K, now it's 60K. So this is how basically a pool is working. What are the risks when you provide liquidity for this pool? So the liquidity provider is the person who will deposit equal value of Bitcoin and of dollar in the Bitcoin dollar pool. Of course, in Jarvis, there is not Bitcoin dollar liquidity pool. We will do Forex, so euro dollar. So you will need to deposit the same value of euro and the same value of dollar. And you will also have, of course, to provide liquidity in GRT, so same value of GRT and same value of Ether because the pair is GRT against Ether. So liquidity provider, for example, at the beginning, he or she had 2 Bitcoin and $100,000. And now they have 1.82 Bitcoin and $110,000. The question is, did they win money or did they lose money? So if we check now how much the liquidity provider have, they have 1.82 multiplied by, I won't do the calculation, and they finally have $219,998. What if they didn't provide liquidity? What if finally the liquidity provider would have decided to keep their 2 Bitcoin and their $100,000? So at the Bitcoin price of 60K now, they would have 2 multiplied by 60 plus 110. They will have this amount of money, $220,000. When you do the difference between how much they would have had if they would have just kept their 2 Bitcoin and $100,000 and how much they have now with their 1.82 Bitcoin, you will calculate that they have lost $880. So basically, liquidity provider, they bear this risk, and this risk is called impermanent loss. So the problem is that the more the movement is violent and the more the movement is directional, meaning that if it goes straight up or straight down, and the bigger those impermanent loss are. So you may think, okay, but what's the point? And you have always impermanent loss. So you will always lose money by providing liquidity. So the question is, okay, so if I will lose money, what's the point? Well, you can, of course, win money. So when I bought those $10,000 of Bitcoin, I have paid a commission to the liquidity provider. In fact, on SushiSwap, you pay 0.25%. So the thing is that when I paid those with 10K, I paid $25 of fee. Those $25 goes to the liquidity provider. Of course, since they have lost $880, the $25 of fees are not enough to offset this loss. But now let's imagine that there is not just one trader, but many. Some are buying, some are selling, and there is way more volume. At some point, the volume will generate enough fees to cover the impermanent loss. Those fees are called the native yield. So when you are a liquidity provider, you will see that you have two kinds of yield. The first is a native yield. It's how much fees are you earning minus the impermanent loss. And the second fees, it's if you're a liquidity provider, since we speak about farming now, of course, you may receive farming rewards. So you will receive tokens. And what we hope is that the token value will offset totally the $880 that you have just lost. This is called the incentivized or artificial yield. There are many things that we can discuss here. For example, what is to harvest volatility. So I told you before that if a movement is violent and directional, you will lose money. Why? Because since the price goes up in a straight line, there won't be a lot of volume. You will win money if actually the pair where you provide liquidity is very volatile, but not very directional. So for example, for Bitcoin to go to 50 to 60K, if you want to make money, you better hope that actually the Bitcoin price will go up and down, up and down, up and down. And actually many people will buy and sell, even if the price goes to 60K, you will still lose your $880. But you will have made so much money with the fees that actually now you are a profitable liquidity provider. You have some websites that shows you some data on how much liquidity provider can earn for some pools and this kind of thing. So what you want as a liquidity provider is a pair which is very volatile, but not very directional. And most likely, and actually the best is a pair who is volatile, but within a range, which means that sometimes it's at this price and then here, and it goes back and goes back. And this is perfect for us because the point of here of Jarvis is to provide liquidity for GRT, which is volatile and directional, but also for Forex pair. And Forex pair, they have very low range. I mean, they are volatile, like it goes up and down, but the range in percentage is very low. So actually the impermanent loss is quite low, and therefore the fees that are generated can offset those losses. There are other reasons why someone could want to be a liquidity provider. For example, and again, here I won't get into detail, so you can do your own research. You can be a liquidity provider as part of your trading strategy. Liquidity provider, somehow they are accumulating some tokens. So for example, if you think that the price of a token against another one will drop and you want to buy, but you don't know when will be the perfect moment to buy, you can provide liquidity. For example, if you think that GRT will fall against ETH, you can provide liquidity on GRT ETH. And if the price goes down, you will receive more GRT because people will sell their GRT to the pool in exchange of the ether. So you will end up having more GRT. And then at some point, you withdraw the liquidity. So you stop being a liquidity provider. And what happened, basically, you have accumulated more GRT. And if the price then goes up, you make profit. And vice versa, if you want to sell GRT without impacting the price, you provide liquidity. And if you think that the price will go up, automatically and time to time, your GRT will be sold for another token. Also, being a liquidity provider allows you to create your own index. For example, the euro-dollar pair on SushiSwap, it's actually a euro-dollar index, which means that the pool, the value of the pool will always follow the price of euro-dollar. So if euro-dollar goes up, the value of the pool will go up in dollar. If euro-dollar goes down, the value of the pool will go down in dollar. And for euro-dollar, maybe it's not interesting, but imagine maybe you want to create a Bitcoin ETH index, and you constantly want to have 50% of Bitcoin and 50% of ETH. So you could deposit Bitcoin and Ether in a liquidity pool, and you can be sure that whatever happens, whatever the price of Bitcoin or Ether will be, you will always have 50% in Bitcoin and 50% in Ether. So if you want to create such an index, you can become a liquidity provider and be paid for that because you're going to receive the trading fees. And of course, you can use liquidity token when you provide liquidity, when you are a liquidity provider. In exchange, you receive a token. which is called a liquidity provider token. And this token has a value. It has the same value as a liquidity pool. And because it has a value, you can use it as collateral or to generate additional yield in some farming program. For example, some liquidity pool token can be used on AAV or even on Maker in order to borrow DAI or borrow any asset on AAV. Okay, the question is from where the volume comes in the liquidity pools. Well, you have two kinds of traders, the speculators, so people who just wants to buy and sell. So for example, with our euro dollar, if someone will wants to buy euro or to sell dollar or for euro or whatever, they may use this pool, and every time they will trade, they will generate a transaction fee that will go directly to your pocket as a liquidity provider. But you also have traders who want to do some arbitrage opportunity. So I will explain you right after what it is, but you have to understand that arbitrage traders are the most important piece of the infrastructure, because it's thanks to them that the price on Uniswap follows the price on Binance, for example. Because when the price on Binance is going up, if no one is buying on Uniswap, the price on Uniswap won't change. It will remain the same. So what you need is someone who will buy on Uniswap and then sell on Binance, because they will buy on Uniswap at a cheaper price and they will sell on Binance at a higher price. And the difference is basically their profit, and they will make the price of Binance going a bit lower and the price on Uniswap going a bit higher, hence equilibrating the price between the two markets. So in our case, we have arbitrage opportunity, and most of the volume that we should expect in the SushiSwap pools comes from arbitrage trader. So for example, on the left, you have Jarvis Exchange, so app.jarvis.exchange. And on the right, you have SushiSwap. So on Jarvis Exchange, we use the price of Chainlink in order to make a trade. Right now, if you want to buy euro or to sell euro, you will do it at the price of 1.22. On SushiSwap, you have liquidity pools. There is no oracle. So SushiSwap doesn't know the price of euro dollar. Therefore, the price is only the reflection of the people who will buy and sell in the pool. And right now, the price on SushiSwap is 1.14. So there is a big difference between the price in Jarvis and the price in SushiSwap. So if an arbitrager sees that, what they will be able to do is to take USDC, then to go on SushiSwap, to buy jEUR on SushiSwap with the USDC. And with those jEUR, they will go to Jarvis Exchange and they will sell those jEUR at a way higher price, at the price of 1.22. So they will buy not at 1.14, because remember, when you buy on a liquidity pool, you make the price goes up. So maybe you will buy at 1.18 and then you will sell at 1.22, making a profit. And while you make this profit, you generate a fees for the liquidity provider in SushiSwap. You generate a fees for the protocol, Jarvis, and the liquidity provider of Jarvis. And you also make the price on SushiSwap goes up, hence reducing the difference between Jarvis Exchange and the SushiSwap exchange. And of course, now with the high gas fee, it's quite complicated to do. So we expect to have way more activity once we're on Polygon or over scaling a solution. But right now, there is this arbitrage opportunity. So you have to calculate if with the gas and the trading fees in both Uniswap, SushiSwap and Jarvis, it makes sense to do the arbitrage. So the question also could be, since in Jarvis, we can trade without slippage at the oracle price, why will someone in their right mind go to trade on SushiSwap? Well, first, you have seen that SushiSwap sometimes can have a way different price, so you can make more profit by doing some arbitrage. But the real point is different. So first, Jarvis needs liquidity provider also. So Syntherium, the protocol, if you want to buy or to sell jEUR or any synthetic assets without slippage, you trade against someone, against a broker contract. And this broker contract needs liquidity. If there is no liquidity, no trade can happen. So if we are in a limited liquidity scenario, the only way for you to buy or sell your jEUR will be to use SushiSwap. So you need a big liquidity there in order to allow people to trade. Also, closed market. So for now, we have decided to allow people to trade anytime they want against the broker, which means that you can trade euro-dollar the weekend, even though the weekend the forex market are closed. And we have accepted to take this risk because the downside is quite limited, because the volatility of euro-dollar the weekend is quite low. But at some point, we will add a bit more volatile currencies, which could move way more during the weekend. And this could create a lot of risks for the liquidity providers. Also, at some point, we will add metals or stocks or whatever. And those markets are not open 24 hours per 24 hours, which means that a liquidity provider on Jarvis won't be able to hedge their exposure, to cover their risks on the market since it's closed. So it means that we need secondary markets that can be used to trade without limitation at any time of the day and any day of the year. So this is also why we need liquidity provision there. But then, more importantly, LP tokens can be a Lego, a piece of DeFi, a Lego DeFi piece. For example, as I said, they can be used as indexes or collateral. So for indexes, we have described in our manifesto how people could trade with a very risk-reduced, almost risk-free trading, being long or short on euro-dollar or actually any pair that we will enable on AMMs, liquidity pools. And this could be very good for us because try to imagine this. So, of course, on Ethereum, it won't happen. It can't really happen. So try to imagine this on Polygon. Let's say that someone is doing swing trading on Forex with a bit of leverage, let's say 2, 3, or 5 leverage. And they decide so far to go long or short, let's say long on euro-dollar. What they can do, they can just do it on their regular broker. But what we can do also is to tell them, look, you can be a long or short using a liquidity pool. So again, it's described in the manifesto or in the last live that we have done. And we will put their position in the liquidity pool. So they will generate interest. They will also receive some yield, which means that the yield and the interest not only will compensate the impermanent loss, but also may compensate a loss. So for example, if someone has went long on euro-dollar and euro against the dollar went down, usually this person would have lost money. But if they have received yield, trading fees, and so on, this loss could be offset by the amount of fees and incentives they have received, which means that at the end of the day, even if the euro-dollar goes down, they could actually make a profit or at least reduce considerably or cancel their loss. So this is one of the projects we will market a lot when we will be on Polygon, because it's perfect. You have almost no fees, instant trading, and almost risk-free swing trading on various liquidity, various trading pair for Forex. And you can do the same, of course, for other markets. But also very interesting, the collateral can be used to generate leverage or yield. This, we will develop this idea later this year. So this is also why we need liquidity pools, and even though we can trade without slippage on Jarvis. Okay, so I will check if now there are some questions before to now explain you what is a Aureus token. Okay. Yeah, but don't get the price of 60K. There was a transaction, Pierre, since I bought for $10K of Bitcoin in this pool. Okay, so now the Aureus token. So the ticker is AUR. It's an ERC20 token. And actually, there are many different Aureus tokens. So the first one, which has been launched last week, is called the Aureus 0819. For the one who used to trade futures or options or whatever derivative with a term it exists, you may have already seen this kind of nomenclature. So basically what it means here, it's the Aureus token, which will end in August, the month 8, the 19th. Okay. So what does it mean? It means that the Aureus token is actually a future contract. So it's a derivative, which will settle the 19th of August. Like any future market, any future contract, you can buy and sell it at any time. There is now a liquid market. Right now, there are $20,000 of liquidity in the SushiSwap pool. But you can also, of course, hold it and wait for the 19th of August to settle it. And I will explain you a bit what it is after. A bit more information about the token. It has been discovered today in Discord that the icon on the token represents a cabbage. And people who have seen the design of our farming DApp, they have noticed that it's a cabbage field. So basically, the background is someone farming cabbage. The tokens represents, there is a cabbage represented on it. There is a small story, of course, to understand behind this. And we're going to give some rewards to the one who will find the connection between the cabbage and the farming program. As I said, it is listed on SushiSwap. So what we have done, we have pre-mined 100 token, and we have kept 1 token. And this 1 token, we have provided liquidity on SushiSwap with it. So we have added 1 EUR token, and we have provided also USDC in order to create the first liquid market for the Aureus token. So 100 token in total will exist, and this makes 0.00016.5 EUR token per block. So this, it's about 3 months. So as you may know, on Ethereum, we can't know exactly how many seconds will last a block. So let's say that 100 EUR token generated at a pace of 0.0065, it's like 3 months. So the program will finish the 19th of August. I think it's around noon, something like that. Again, we can't really predict it. We're going to give you, of course, the block number where the program starts. It will be tomorrow morning, and the block number where the program ends. Okay. So as you can see now on this screenshot, the price of the EUR token is $30,100. So the question is, what is the price of the EUR token, and at which price did we list it? So first, what you can settle the 19th of August. So the 19th of August, 2021, you will be able to sell 1 Aureus token for 1% of something called the reserve. Of course, if you have less than 1 Aureus token, you will receive less than 1%, but it was just for simplifying the math. You will have around 1.5 months, so it's 300,000 blocks, in order to sell your EUR token to the reserve. After this 1.5 months, whatever the reason is, you may have forgotten or whatever, you won't be able to claim the part of the reserve, and the part of the reserve will just be added to the treasury. So the value of 1 Aureus token equal exactly 1% of the reserve value at the date of the 19th of August. And this is basically how the many trading mechanics can happen. So the question is, what is the real value of the Aureus token? You can only estimate the real value by trying to estimate what will be the value of the reserve at the date of the 19th of August. So it means that the more we get closer to the 19th of August, and the easier it will be to predict the price of 1 EUR token, which means that maybe the price of the EUR token will go up a lot at some point, because people, the market, will think that the 19th of August, the value of the reserve will be very high. Maybe it will be the opposite. Maybe people will think that the 19th of August, the value held in the reserve will be very low, and so they will just sell the Aureus token. So it will basically be a fight between people who thinks that in August, the reserve will have a lot of value against people who thinks otherwise. And it will be very interesting because, again, the closer we get to this date, and the less volatile will be the Aureus token. So now the question is, okay, but what is this reserve? So the reserve, it's just a simple smart contract which is accumulating every week. So every Wednesday, we will add a certain amount of tokens to this reserve. So it means that every week, you know what tokens and in which amounts of tokens we are adding to this reserve contract, which will help you to somehow anticipate or know the real value of the Aureus token. Something important, the contract will hold those tokens, and those tokens will be chosen by the governance, but not for this current program. Why? Because we just have revealed today how does the farming program work, and we didn't want, of course, to give too much information before, and so the governance will be able to decide what to do. So for this very first program, we have decided instead of the governance, and like that, GRT holders will see what are the trading mechanism, what works, what doesn't work. And for the next program, they will be able to vote on what do we add to this farming contract, to the reserve contract. So what we have decided to add is the following: 500,000 GRT, 40% of the UMA tokens that we are receiving on a weekly basis. So if you remember, every week, UMA, the project, distribute 50,000 UMA tokens to the project which are being built on the top of UMA, which means that if you, and they do it according to the dollar value of the synthetic assets minted by this project. So right now, as you may know, we have capped the liquidity. So the maximum amount of synthetic asset that could have been minted was $700,000. So last week, we have received exactly 700 UMA tokens on the top of the 50,000 tokens, which means that $700,000 of synthetic assets last week represented 700 UMA token. And at the price of, for example, 25 UMA token, it's something like almost $20,000. So last week, we received something like $20,000. We're going to take 40% of those UMA token, and we will add them every week to the reward contract. What does it mean? It means that the more synthetic assets are minted on Jarvis, and the more UMA token we receive. And the more UMA token we receive, the more UMA token will be added to the reserve contract. And the more the reserve contract is holding UMA token, the more the Aureus token will be linked to the price, the value of those UMA token. So for example, if at some point we explode in terms of TVL, but also in terms of amount of synthetic asset minted, we will receive way more UMA token, and the price of the Aureus should go up because people anticipate that in the 19th of August, they will receive quite a large amount of UMA token. So you will need to basically to try to estimate the correct price of the Aureus token. You need to follow the price of GRT. You need also to follow the price of UMA token, but you also need to follow the quantity of synthetic asset minted on Jarvis and versus the quantity of synthetic asset minted or in UMA. So it means that somehow we are incentivized all together to mint more synthetic asset, because the more we mint, the more we receive, and the more we earn. Then 50% of, sorry, it's in French, 50% of the commission of the broker contract, excluding the fees that goes to the liquid trader, will be added as well. So every time someone buys jEUR or sells G-Swiss franc or whatever is happening against the broker contract, which is now live, as you know, there is a fee. And this fee, half of it goes to the liquidity trader, half of it goes to the protocol. So 50% of the protocol fee will be added to the reserve program. So it means that every time someone will buy $10,000 of jEUR, there is a fee of 0.1% that will be collected by the treasury, and half of this will go directly to the contract. So the more there is trading activity in against the broker, and the more USDC will be added to the pool. And also 50% of the bank contract commission. So the bank contract are still not live because we have to wait the vote of UMA for that. But the contracts are ready. So as soon as UMA has voted and approved our new contract, and as soon as they also have approved our new price identifier, we will allow people to mint synthetic assets with first UMA token. So why we have decided to go first with UMA token? First, because We are built on the top of UMA, and there is quite a decent community there. And we could allow them to use their UMA token to come in our project, to mint jEUR or jSwiss franc, to sell those jEUR or jSwiss franc on the broker contract against USDC. So this will create fee here and fee here. And then they will deposit this into the SushiSwap pool. Why? In order to receive Aureus token, which will give us the opportunity to win more UMA token, but as well GRT and so on and so on. So by using UMA token, we will make the project attractive for UMA token holders. They will come here, they will bring more TVL, and if they bring more TVL, they also bring more synthetic assets. And if they bring more synthetic assets, we're going to receive more UMA token, and so on and so on. So this is why we have decided to start with the UMA token. And of course, after we're going to add more collateral, ETH, Bitcoin, Link, Curve token, but of course, GRT. But for the GRT, we will need to wait to have a bit more liquidity, because as you may know, in order to have less risky synthetic assets, you need the collateral to be quite liquid. And then, as I said, 50% of the commission of the bank contract. So when you mint jEUR using UMA or Curve token, you do not pay interest fee. It's a zero fee interest system, but you do pay a commission between 0.3 and 1% of your collateral. So if you deposit UMA token, we're going to take 0.5% of part of those UMA token, and this will be basically the fee in order to mint. And those fees will go to the governance, and half of those fees will be added to the bank, the reserve contract. So again, the more people will come to mint jEUR, the more USDC here will be added. The more people will come to mint jEUR with UMA token, the more UMA token will be added to that, and the more the reserve contract will have value. And also, the more we're going to receive UMA token, and again, the more it will have value. And the more it has value, the more the GRT will have value, and and so on and so on and so on. So basically, those will be the mechanics around the valuation of the Aureus token. So as you can see, it's not that simple, even though it's not super hard neither. But what I have in mind here is that there will be most probably some asymmetry between the information. Many people won't do your own research. They will just see a new token, and maybe they will just buy it or sell it or just come to farm it and say it, whatever they will do. Some other people will make some research. They will check this video, they'll read the article that we will launch later today, the tutorial and so on. They will join the community, they will ask questions, they will understand the point of the Aureus token and the way it works. This asymmetry of information will create arbitrage opportunity between the people who don't know, and the people who know. And those arbitrage opportunity will enable long-term people who to buy Aureus token at a discount, for example, or to sell it when it's way overpriced, and that's all. So let's try to make small estimations of how much it could, and I insist on it, it's just an estimation, it's absolutely theoretical. So let's say that at the 19th of August, we have $4 million of synthetic assets which have been minted. And in UMA, there is only 54 million token dollar of synthetic asset minted. $3 million have been minted through the broker contract, and 1 million through the bank contract. If the price of GRT in August will be around 20 cents, the contract will hold $100,000. 40% of the UMA token received with those numbers, so $4 million minted against 54 million token, $54 million of synthetic asset in UMA. And the price of the UMA token will be $25. The contract will hold something like $550,000. The 50% of the broker commission are too complicated to estimate, so I decided to exclude them. And the 50% commission of the broker contract. So basically, if $1 million have been minted using UMA as collateral, most likely around $3 million of UMA token would have been deposited. And by taking some commission of those UMA token, we will receive around $7,500. So altogether, with this estimation, the contract should hold $660,000 in August. Of course, it depends on many various things. The price of GRT, the price of UMA token, the number of synthetic assets. Maybe a project will arrive and will mint a lot of synthetic assets, which will dilute our reward. So if this happens, you know what you have to do. You have to re-estimate the Aureus token and maybe to sell them. But it could be also the opposite. Maybe we will grow a lot the synthetic asset and so on and so on. Maybe the price of UMA, maybe the price of GRT will go up and so on and so on. So basically, this is how you can do an estimation. For this amount, one OR token will equal to $6,600. You have seen that today the price of one Aureus is $31,000. So we are quite far from this estimation. We listed the token at a price of $2,400 because it's what we estimated. We estimated that in the 19th of August, the contract will hold $240,000 of assets. But it's a very low estimation. And it was by not considering the price of GRT. So we only considered the price of UMA token. And I think our estimation was if we had only $1 or $2 million of synthetic asset minted. So I prefer to have a low estimation instead of a bigger one. Then people started to buy the token. So the price went up. There is very low liquidity. So even if you buy just a few hundred of dollars, the price goes up. And then today we have decided to provide liquidity. So we have bought some of the token, $5,000 of the token, which pumped the price, and then we have provide liquidity. So we did that because like that now there is something like $20,000 of liquidity in the contract. Tomorrow, when the program will start, since you will receive per block 0.00016 OR token, approximately per day, you will receive, everybody will receive something like 1.2 Aureus token, which means that at the end of the first day, the maximum amount that can be sold will be 1.2 Aureus token. And there is enough liquidity today to absorb this one Aureus. So what we expect, it's the first day, I mean, this is just my expectation, people to realize that, okay, $31,000 for this token is a bit too much. So maybe people will sell it and they will start to cash out some money, USDC. But then it will make the price closer to 6 or 10K, which is way more reasonable. And so people will stop selling the Aureus token and they will start to provide liquidity on the Aureus token, which means that they will earn yield because there will be different farming programs. The first one will be GRT ETH on Uniswap and on SushiSwap. Then there is jEUR USDC, jGBP USDC, jSwiss franc USDC, and Aureus USDC on SushiSwap. And the people who will provide liquidity on the Aureus token will earn as well Aureus token. And the yield could be quite big, as you will see tomorrow at the beginning, especially at the beginning. So you will have to decide whether you just want to be a liquidity provider for the Aureus token and just to speculate on its value and then exit before mid-August, or if you want to buy and hold. I mean, many different strategies will be able to happen there. And the point of the Discord, of course, will be to come and to discuss the different estimations, strategies, and what people are doing. So the idea is to try to engage the community also with that. So yeah, now it's time for the questions before I will show the application and explain you a bit how to do. So yes, the Aureus token has been developed by Jarvis, of course. How this will affect the price of GRT? So good question. What? So GRT, it's a token which allows you to participate to the governance, and also at some point to be used as collateral in order to mint synthetic assets. So the more we mint, and the more the project, the ecosystem will receive UMA token, trading fees, and all the commissions. And the more there is this cash flow, and the more the value of GRT will go up, because of course, the value of GRT is somehow connected to the value of the network. But also, this will allow us to increase the liquidity within the GRT market. when we reach some threshold, for example, something like $10 million or $7.5 million of liquidity in GRT, we can use it as collateral. Using GRT as collateral will affect the price of GRT because you will not need to sell GRT in order to cash out. You will be able to deposit GRT in a contract, mint jEUR, sell the jEUR for real euro or for USDC or for Bitcoin. So having GRT as collateral will decrease the selling pressure. And also, it will create way more utility to the token, hence creating some momentum. So everything is connected. The farming program is here to also provide more liquidity to the GRT token, so it can be used as collateral. It also generates more trading fees for the governance, so this can arrive in cascade in the GRT token. And that's pretty much it. So the Aureus token, there will be one Aureus token per program. So the first program will last 3 months, but we can launch a new Aureus token maybe in 1 month and a half. For example, as soon as we're on Polygon, but like the week we're on Polygon, we're gonna launch an Aureus token on Polygon, which will be maybe, I don't know, the Aureus token 1020, which means that it will settle the 10th of October, 2021, the 20th of October, sorry. If we launch, for example, we will work after on launching something on Uniswap v3. So there will be an Aureus token with Uniswap v3. So at some point, there could be 1, 2, or 3 Aureus token that will coexist. And some Aureus token may have more values than the other one, and that's all. Also, we have decided to design this system for one reason. So for example, on Sushi, you can decide either to stake your GRT in SushiSwap directly and earn Sushi token, or now you will be able to stake it on Jarvis and earn the Aureus token. But you can't do both. So the version 2 of the farming program will support both, which means that you will be able to farm Sushi token and at the same time to farm Aureus token. But the idea could be to add the Sushi token directly to the Aureus token. So the Aureus is just a contract holding more tokens. Another example, when we'll be on Polygon, my idea will be to try to partner with AMMs and to convince those AMMs to say, okay, if we bring our liquidity to your AMM, we will bring more value. So maybe we can do some kind of token exchange. So they could give us some token that will be added to the Aureus token on the Polygon, increasing its value, which means that on Polygon, the token can receive way more, the contract can receive way more token, and so on and so on and so on. Also, right now, I wanted to keep things quite simple, but my idea in the long term will be that the reserve contract could also be administrated, which means that for now, it's just a stupid contract. We can't do anything with it. I mean, I can't trade with this contract. But at some point, what we want is to launch another version of this contract where an administrator will be able to trade or farm. So imagine the contract receives UMA token and is able to sell part of the UMA token for ETH, put it on SushiSwap to farm some Sushi token, and this will be added to the Aureus token number X. So it's very flexible to have this design. We can add or remove some tokens. And some tokens some Aureus token may last 6 months if at some point the governance decide that the next program on any blockchain or Polygon should last 1 month or 6 months or whatever. We can do basically whatever we want. So where can you buy Aureus token? You can buy it right now on SushiSwap. I will share my screen now if there is no more question. Yeah, it's Aureus. It's a future contract which somehow reflects the success and the cash flow of Syntherium. Because the more there is value in Syntherium, and the more there is value in the reserve contracts. So this is why I said that at some point there will be this asymmetry. The people who are bullish on Syntherium, they will be bullish on Aureus, and vice versa. Okay, so let me now share. I will share my screen to show you a few stuff. Okay, so the question is, where can you buy jEUR or jSwiss franc or jGBP? So the easiest way to buy them is to use app.Jarvis Exchange, and you need USDC for that. So you just go there, you just buy, for example, wait. I have the French keyboard, sorry. So you just buy, for example, $2,200 of jEUR. The price of jEUR won't change. Remember, it is with the Oracle, with Chainlink. So you will receive 1.8 thousand jEUR. Of course, you can directly enter in the application how much jEUR you want. And you will buy them, and then you have to go on SushiSwap. So I didn't open SushiSwap, so let me open it. And in SushiSwap, you can provide liquidity directly on looking for the jEUR token here and selecting USDC. If and then of course here you will add USDC and jEUR. You can also do it directly from our farming application. So you will go on yield.jarvis.network, connect your wallet, and you will see this interface. You have yield and claim. This is not the final interface, it's just the one we're going to use now, but we are preparing a bit more detailed interface that we will launch at some point this summer if we can. So you can also provide liquidity directly from this interface. No need to go to SushiSwap, but again, if you want to go to SushiSwap, you can look for jEUR directly here. So for example, if you want to provide liquidity for Swiss franc, you just go there and you will click on add liquidity. And automatically the tokens will be selected and you will be able to provide the liquidity directly. Remember that if it is the first time that you provide liquidity, you will need to approve the token. So to approve Swiss franc and to approve USDC. Once you have provided liquidity, you can stake your token. And to stake your token, you first need to approve. And then you will have two buttons here, which will tell you, okay, you can stake your liquidity or unstake your liquidity. So it will be a two-step system. First, you add liquidity, and then you stake liquidity, okay? And you will also see when you stake liquidity, a button here, which will allow you to harvest your Aureus token. So you can harvest at any time, which means that you can receive the Aureus token you have won today or tomorrow. I mean, you can farm, you can claim at any time. Then the 19th of August, you will go back to this interface and you go to claim. And for now, the storage is empty, but it will recognize automatically the tokens which are held in the storage. So it's the reserve. And here you have the countdown on how many days are left before you can claim them. So what will happen at this time? If let's say you have 2 Aureus tokens, you will just click on 2, approve, and claim. And what will happen? Your token will be burnt, and in exchange, you will receive directly in your address the equivalent, the share equivalent to your OR token. So if it was 2 OR token, you receive 2% of the reserve contract. As simple as that. Nothing else to do in order to participate to the program. So again, 2 steps. You provide liquidity, you stake your liquidity, you harvest your Aureus token, and then either you go to buy or to sell them directly on SushiSwap, So you will need to add the token. We actually today we did a request to add the Aureus token and the logo to SushiSwap. So I don't know when it will happen, but for now you will need to add the contract address that we'll give to you. Of course, this will be in the tutorial and in the article that we will publish. And here you will be able to buy or sell the OR token, obviously. That's all for this live. So now, if you have more questions. Ah, I forgot one thing. I have to reshare my screen. I don't know which screen is currently shared. Okay, so the thing I wanted to add, I don't know if you can see my screen here. Of course, there is an NFT. The background of the application is an NFT. So you will be able to buy this NFT. And of course, the one who will hold this NFT, the 19th of August, will receive part of the Aureus token, which remain in the liquidity pool. So as you remember, I said that we have pre-minted one Aureus token that we have added in the liquidity pool. And we, as a liquidity provider, we will not participate to the program. Of course, I mean, not with this one token. As you may know, we have small crypto funds where we manage our treasury. So as anyone, we will participate in to Jarvis with this money, but it has nothing to do with the first liquidity provider. So the first liquidity provider was us, the project. So we won't stake this liquidity, which means that at some point at the end of the program, we will withdraw the liquidity which remains. Maybe there will be more Aureus token, maybe there will be less, who knows. Right now, since people has bought the token, there is less Aureus token and more USDC, but regardless. When we're gonna withdraw this liquidity, we will send this liquidity to the owner of the NFT, which means that maybe someone will buy the NFT at some price, and maybe someone will want to buy it at another price, and there will be, of course, a secondary market for that. But the ultimate owner will receive the remaining rewards, I mean, Aureus token and USDC. If you forgot to claim your Aureus token, Pedro, at some point in the code, if someone checks the codes, we will have the right to claim the Aureus token instead of you. So I don't remember exactly the numbers. I think it's something like 2 months or 3 months. So if after 3 months you didn't claim them, we can claim them instead of you, and we can just put them, let's say, in the next program. So they will be reinvested in the next program. And we can't do it after a certain block time, which means that after a certain block number has passed, we have an admin function which allows us to claim the unclaimed Aureus token. And so is the same with the reward contract and the reserve contract. After a certain block time, after I think it's something like 1.5 months or 2 months, if some people didn't claim their reward, we don't want to leave those rewards locked forever on the smart contract, because it's what will happen. If someone holds one Aureus token and doesn't do anything for 2 months, the token in the contract are locked forever. So what we have done, we have added this function which says after a certain amount of block, we consider that the people who didn't claim, they won't claim. So we're going to claim instead of them and reinvest the unclaimed token in another farming program. No, Antoine, I don't know when it will be possible to farm Polygon because it doesn't depend on us. It only depends on UMA. For the one who follows the project, you know that we are ready, just that we need the bridge by UMA for the liquidation and the dispute. And until we don't have this bridge, we cannot go on Polygon. The NFT will be, as usual, on Rarible. So we will launch it at some point. Okay. Is there any other question? Okay, so I will expect some questions in the Discord. We'll be here to answer them, of course. And I think it will be quite funny. I think that some people will not like this program. It may be too complicated for them. Fair enough. There are many other programs that can be that you can participate, and also there will be at some point other kind of program on Jarvis with a simpler design. But for liquidity provision, we wanted to have this. So there is not a specific time, Arno, at what time it will be launched. It will be at a certain block time. I think, if I remember, but maybe I will mess up the how to say, with the different time zone. But I think it's at 10 or 12. I don't remember exactly, but we're gonna say it in the article that we launch later. Also, we have added liquidity. We have added $300,000 of liquidity to the broker protocol a few hours ago, which means that now you can mint around $600,000 of synthetic assets. We will add way more liquidity in the coming weeks, but what we are waiting for is that this Friday there is an important vote. So I'm giving you now the first alpha leak for the Aureus token. So Friday there is a vote on UMA, which will allow us, if the vote passes, to launch new broker contracts, which are 2 times more liquid, which means that right now there is something like I don't remember the exact number, but right now there is something like $700,000 of liquidity in the broker contract, and on the $700,000 already $400,000 have been used, so there is just $300,000 free of liquidity. At some point, we will launch the multi-liquidity pool, which will allow anyone to become liquidity provider. So when this will happen, we expect, of course, the TVL and the number of synthetic assets to explode. But for now, we are still the sole liquidity provider. And we will then, if the vote pass, launch a new kind of pool, as I said, with 2 times more liquidity capacity, which means that the same $700,000 of liquidity will be able not to mint just $1.4 million of synthetic assets, but 2.8, which means that the maximum capacity will go to close to $3 million. Hence, in my presentation, the estimation of $3 million with the broker contract and $1 million with the bank contract. But of course, we will keep adding liquidity during this program, which means that at some point, there will be maybe the possibility to mint up to $5 million or even maybe $10 million. So this we will see, of course, and the one who will follow the project the closest will have the alpha. So since this can create a lot of some kind of insider trading, because we will get the information, of course, before, what we will do, of course, we are committed to that. We will always publicly say few days in advance when we intend to add more collateral, add more liquidity, or this kind of thing. Like that, you have the time to price the market. So maybe you will buy Aureus token, maybe you will sell according to the news, and like that, there won't be a big surprise and so on. And those information will be only available on Discord and Telegram, which means that you really need to be on Discord and Telegram if you want to follow and to have somehow this alpha. The available trading pair for tomorrow will be GRT ETH on Uniswap, GRT ETH on SushiSwap, Aureus USDC on SushiSwap, and jEUR USDC, jGBP USDC, and jSwiss franc USDC also on SushiSwap. So Ilian shared the block time. So let's see when it will be. It's in 17 hours, so it will start at noon Bulgarian time, which means at 10 French, what to say, at 11 a.m. French time and 10 a.m. UK time, GMT. Okay, guys, so thanks a lot for your attention. See you in Discord, and for the French guys, see you in, I don't know when, is it in 1 hour already? Yeah, it's in less than 1 hour, 45 minutes. Let's the farming begin. See you guys.